Okay, so we are continuing with where we ended yesterday, which is question 4 of the 2018 Fundamentals of Accounting question paper. Yesterday we did half of the question where we drew up our subscription account, and today we are doing the last part of the question, which is the income and expenditure account. Ne? So we said that income and expenditure account, when it comes to non-profit making organizations, they draw up income and expenditure accounts, while trading businesses draw up an income statement. Ne? And they are both of them calculate profit. Ne? Although the profit of a non-profit making organization is referred to as surplus, while a profit of the trading businesses is referred to as net profit. Okay, so question 3.2. So our question is saying that draw the income and expenditure account for the year ended 31 December 2016. Okay, so the first thing that you write, the first thing that you always write is the heading. Ne? So make sure to write the heading first. The first thing that you always have to write the heading. So the heading is an income statement. Income and expenditure account of Oshakati Youth Club, the name of the NGO, of Oshakati Youth Club for the year ended 31 December 2016. Okay. Now that we are done with now that you're done with our title of the book, we have to draw up the book or the statement. It's actually a statement. The day details amount, day details amount. Okay. Sorry. Let me use the easiest format. Okay. So there are actually two formats, both the vertical and horizontal I use, but I love using this one, just like the normal income statement of trading businesses. So the first thing you record is your income. So you write you write the title income or the heading, and then after that you list down all your income that you are given. Ne? Now looking at the information that you are given, you will need to list down all the incomes that you are given. Okay. Now when you list down, the first income that you have is the subscriptions. Ne? The subscriptions that you calculated yesterday is always our first income. So subscriptions. And yesterday we got an amount of 27,000. You see it's written in to be transferred to our income and expenditure account. So the 27,000 is our subscription. So we write it at the first, at the second, in the at the middle column, because this is not the final amount of our incomes. And then we check what other incomes do we have here. And please, I hope you guys can hear me. If you can't hear me, or if my line is cutting, just let me know. Okay. So what other income are we given there? Looking at this, we have receipts for renting of park. So we actually have rent income. Um, we actually have receipts for renting of park, which is actually rent income of how much? Of 1,000. So that's an income that we have there. So we record the 1,000. And then we move on. What other incomes we have there? We have receipts of receipts refreshing guests. It's also an income. And the amount is 6,000. And then we move on to our incomes. What other incomes do we have there? We have sundry receipts. And our sundry receipts in this case, they are 12,500. So another thing that you should know is that if the non-profit making organization has a trading business, let me say they have a they have a bar or restaurant or a stall or so, you are required to draw up a trading account, remember? So after drawing up the trading account, if you get a net profit out of that trading account, then it is also an income, and so you will have to record it under your income in the income and expenditure account as profit on bar, or profit on a restaurant, or profit on stall. Do you understand? So if your non-profit making organization has a trading business, is involved in trading businesses, then you will be required to draw up a trading account of that trading business. And then if you get a profit, let me say profit on that small bar or profit on the store, then you will have to record it under income as profit on bar, or profit on store, or profit on a restaurant, depending on the type of trading account you have in your NGO. Okay. So we move on. So we move on to our next item, since these were the only incomes that we have, unless we have other incomes. But looking at the information given, these were the only incomes that we had: the subscription, the receipts for renting of park, the receipts of refreshing guests, and the receipts. And so remember, receipts means money received. You give a receipt when you receive money. So in this case, we'll have to add up all our incomes together. So let's quickly add up. Let's quickly just add up all our income. So we have subscriptions of 27,000 plus rent income of 1,000 plus receipts of refreshing guests of 6,000 plus sundry receipts of 12,500. So in total, our incomes are 46,500. So in total, we have incomes of 46,500. Okay. And then after that, once you're done with your incomes, you less your expenditures. So you less expenditure. And we said that expenditures is just the same word as expenses. It's only that when it comes to non-profit making organizations, we do not use the word expenses, but we use expenditures. So what type of expenditures do we have? What expenditures or what expenses did we pay for? So looking at this, the first payment we made was for repairs, né? And we know that repairs are expenses or repairs are expenditures. So we have repairs of 1,200. And then we have salaries and wages. We have salaries and wages of 10,000. And then we move on to our next expenditure there. We have printing and stationery. So we have in our printing and stationery 3,000. And then from there we move on to the caretaker's wages. The caretaker's wages. And the wages of the caretakers were 6,800. And then we check again, okay, we have refreshment materials. So refreshment materials, and those were 8,500. And then we move on again. We also have electricity expenses that we paid for. And our electricity expenses were 4,000. Okay, so what other expenses do we have there? Looking at the expenses, we have our vehicles. Okay, now before that, I have noticed that we have some payables, ne? And we said that payable, meaning that it's accrued, it was not paid. And therefore, what did we say about accruals at the end of the year? They are added. So these payables belong to the current financial year, and therefore we'll need to add them to our expenses, to our expenses amount. Therefore, we have a payable of receipts, a payable of repairs, and therefore that's why we'll need to add it. So in brackets, you will have to show your calculations. 1,200. You plus the payable of repairs, which is 800, ne? Which is 800. So in total, you will have repairs of 2,000. The 800 also belongs to the current financial year, and that's why we have to add it. And then we also have payables for vehicle running expenses. So vehicle running expenses, a payable meaning it's accrued, it's not yet paid, and therefore because it belongs to the current financial year, it should also be added. So the total amount that was paid for vehicle running expenses was 5,000. So you add the payable amount of running expenses, which are 400. So our total vehicles running expenses that we were supposed to pay during the year are 5,400. And then you check again, we also have payables for refreshment materials. We also have payables for refreshment materials, and therefore we will need to add the amount. We will have to add the amount. Okay, so our refreshment materials in this case, they were 8,500. And we said that we also have a payable of 2,200. So the total payable is 8,500 plus 2,200, which will give us 10,700. Do we all understand? Do we all understand before we move on? Do we all understand?
Yes.
Okay. So from there, now that we are done with all our expenditures, we will need to add them up and then record our final amount next to expenditures. And the subscriptions owing of 3,000 was already included in the subscriptions account. That's why we did not have to add it on our subscriptions, because it was already added. If you check your subscription account for yesterday, the 3,000 which is accrued still owing was recorded already, so it's already included in the 27,000. Okay, so let's try adding up all our expenses or our expenditures. So we have 2,000 we have 2,000 plus 10,000 and then we add 3,000 plus 6,800 plus 10,700. Then we add the 4,000 plus another 5,400. We'll get 41,900. So our total expenses or our total expenditures amount to 41,900. I believe we all got that amount. So your incomes minus your expenditures will give you either your surplus or your deficit. But looking at this, you can tell that your incomes are more. Ne? Your incomes are more than your expenditures, and therefore you will have 46,000 46,500 minus 41,900. And then you get a surplus of 4,600. Do we all understand, or are there any other questions? Any questions? Do we have any questions? Or you guys are fine with the topic or with the question of non-profit making organizations?
I don't have a question. I don't know about others.
Pardon?
No question.
Okay. Do you guys understand this topic? Do you guys understand this topic, or you prefer us going through the slides? Huh?
Yeah, you can take us through the slide as well. You can take us through the slide as well. Just for us to have a better understanding.
Okay. So so we are moving on to the last question. We are moving on to the last question in the 2018 question paper, which is question 5. Now with question 5. Now with question 5, this is
Sarafina.
Yes.
Sarafina, before you continue, your network is cutting.